what's your mentality on arbitrage specifically? Let's start there, and then we'll go to some private label stuff. But what do you think most sellers should be trying to do when it comes to a fast nickel versus slow dime thought process?
So there's really, for me, this question kind of goes back to what type of economic environment are we in? And, more than ever, I think sellers should be focusing on that fast nickel. Now, again, if you talk to most folks in business, they'll always tell you to, focus on the fast nickel. There are times, though, and there are economic environments where you may want to do what we call a long-term hold. And that was the hold that you were referencing there earlier, where, if you're in a good position cash flow wise, you can long-term hold products, right? And wait for that slow dime. But that only works if you have inventory, right, that is turning quickly with that fast nickel. And I think in the environment that we're in, I think there's an abundance of inventory that's out there in the retail space. We've talked to a number of people. They drive by their Walmart and they'll see 80 containers full of inventory that are in the Walmart parking lot that have not been checked in yet because Walmart doesn't have any space. And so, the supply chain was backed up for so long, and then Target, Walmart, these other major retailers, they overordered and now they don't have space. And so in that type of environment, and that's one that I think we're in right now, you really want to be about the fast nickel, because your slow dime products, they may take 2 or 3 years for you to move, for that price to move to that level that you were hoping for. And so that's when it comes down to decisions. Like, as a business, and we've made this a number of times with our products, there may be times where you say, you know what, I'm just going to have to take a loss here. I can't afford to hold on to this inventory any longer. What I had projected the profit to be is not what it is going to be. And I don't want to hold this product for another year. Therefore, I'm going to drop my price and I'm going to blow through the product. And one of the great things, right, about selling on Amazon, if you find yourself in that situation, generally, and we've always been able to move the product. Sometimes we break even on it. Sometimes we lose a couple dollars per unit, but because of the traffic on Amazon, we're always able to go through it. But as a seller and as a reseller, you definitely have to come to terms with those products, and you got to make sure you're managing your inventory. And you may come into situations like that, right, where you had a product, you thought it was going to be a slow dime, but you want to be a fast nickel. And then just to recap, I do think because of the overabundance of inventory we're in right now, you want to move things quickly.
Well, and let's talk about that. Anybody who imports obviously sees this, but if you're not importing products, you're probably not regularly looking at container prices, right? If you're doing arbitrage, like, who cares what container prices are? But it does impact the supply chain and the unit economics of everything that that comes into America. And so we've seen container prices go over the last year or decrease dramatically over the last year, right? In 2020, it shot up. We paid over $20,000 for some containers at one point, which was sickening, but we just needed the product. And now it's back down to maybe not pre-COVID levels, but to more realistic levels. Into the West Coast, you're seeing container prices that are in the $3,000-$4,000 range, which is basically back to normal. And so you have all these retailers and brands, us included, who have inventory on the books now that is basically bloated, expensive inventory. So you have, like you mentioned, like I don't know the inventory turns of Walmart specifically. I'm guessing they're pretty tight, but you still have all these big brands, all these big retailers across the country who have inventory that was purchased a year ago. A lot of these companies have to purchase way in advance, and stuff from China just takes months to get here and everything. And so it's expensive inventory. And a lot of times we're looking at this ourselves, and sometimes you just want to get it off the books. You just want to kind of take the loss and get it out. I think that's what we're seeing with Walmart and some of these brands. And so in some ways, it's really easy to get inventory right now. If you're doing arbitrage, there's a lot of inventory out there. We're probably going to see a lot of deals. The question is, what seemed like a deal, is it truly a deal forever? You kind of see this in the stock market or other things. You have this sunk cost fallacy where something used to be very high priced and then it comes down. So it seems like a good deal. But the question is, will it ever get back to that price it was before? And maybe it does eventually, but in a realistic time frame. And so that's something I think we need to be careful on. I've heard several arbitrage sellers say that they're fearful that their buyers are going to buy too much right now. and not be able to sell it when everybody kind of comes in. And you see this when a lot of prices of product kind of come crashing down quickly because a bunch of sellers jump on. So this is where that fast nickel is super important.